Washingtonians will have the opportunity to shape the future of our state by voting yes on November's ballot initiatives. Today, we're taking a deeper dive on I-2109, which repeals the harmful capital gains income tax. We'll go into further detail on why ending the tax on success and innovation is so important for Washington state. Washington's beautiful weather, fresh air, and endless outdoor adventures are an asset. It draws people in from around the world and is the only thing that feels like home for so many who have grown up in our secret PNW garden. But such an asset can only be relied on for so long before other factors come into play. Today we'll look at several states, including our own, whose politicians increased taxes on their own residents so much that people are fleeing those states, causing a significant loss in opportunity and leaving people literally paying more for less. By looking at other states and comparing them to our state's current status, we will see the path that we're heading down. We'll also show you why voting yes on I-2109 this fall is the solution to get us headed back in the right direction as a global leader in innovation. So let's start with the obvious. What are capital gains? Capital gains are the profits from selling assets like an Amazon stock, the small business you've grown your entire career, and the home you've raised your family in. Washington state politicians have already come for stock sales and small business sales over $250,000. And even though they said they won't tax anyone else, they've already introduced a bill to expand that tax to profits of just $15,000. And though they've exempted retirement accounts and home sales for now, politicians also promised cap and trade would only increase the cost of gas pennies. So you've got to ask yourself, will Olympia be able to keep their hands off our homes and retirement accounts when their next great idea pops into their heads? Or will we be on the menu next? In every other state with a capital gains tax, it is legally defined as an income tax, 100% of them. But we'll get into how Washington lawmakers changed the definition of income to take more of your money later. You don't have to be an economist to recognize that politicians are always looking for new sources of revenue, since they just can't get enough of your money. They're frequently moved by a simple idea: tax the rich. We've explained in another video the main problems with a capital gains income tax, which can be summed up like this. Politicians are always working to expand the tax to hit more Washingtonians and won't stop at taxing the rich. Small business owners and tech industry workers are hit unfairly. The wealthy will pack up and leave if the tax structure is too extreme, and Olympia doesn't feel the need to prioritize spending because they can always just take more of your money. If you haven't watched that video, click the link in the description to check it out. It is chock full of great information about how harmful a capital gains income tax is to innovators, economic development, and communities as a whole. Even though just one of those reasons we listed should be enough to turn politicians away from implementing a capital gains income tax, we're going to share real-life examples from several states to illustrate one key detail. The wealthy are the most mobile residents in any state. They can relocate anytime they want. When they leave, they take their tax contributions, their businesses, their assets, and all the jobs that they created with them, leaving less opportunity for Washington state. And when those taxpayers are gone, do you think Olympia is going to cut programs, or will they just shift those taxes onto the rest of us who aren't able to pick up and move quite as easily? Our first case study where people are fed up with excessive taxes and are voting with their feet is Connecticut. In Connecticut, Democrats and labor unions have been advocating for a bill that would create a 1% capital gains surcharge on top of the existing 6.99% top marginal income tax rate. It didn't pass this year, but politicians never give up that easily. Connecticut is the only state with a gift tax and is among a select few states that impose both mansion and luxury taxes. It's also one of only 12 states with an estate tax, collecting 12% on estates valued over the federal exemption level. In 2020, 40% of the state income tax was paid by 2% of residents. 478 people paid that 6.99%, which made up 13.2% of the state's income tax revenue. The government in Connecticut collects $30.9 billion every year, and yet they have some of the highest debt ratios per capita. Now, instead of dealing with their debt and working to adjust their priorities to account for the difference, politicians simply add another tax to residents. Hartford politicians are pushing wealthy residents out of the state and reinforcing to job creators and entrepreneurs that they should not set up shop in the Constitution state. Where will all of this oppressive taxation lead to for Connecticut? For a sneak peek at their future, we turn to our second case study, Massachusetts. They have been overtaxing their residents for years. A Boston University study found that high income taxes, exorbitant housing costs, and unaffordable healthcare has caused outbound migration to increase 1,100% since 2013. Massachusetts politicians have lost out on billions in tax revenue, all because they got too greedy. And what are they supposed to tax when the people are gone? Tea? Witches? California, with similar natural beauty and resources, also tried an experiment with high taxes and regulation. They believed the fairy tale that you could continue taking money from people to pay for programs that don't work, and people would just stay, all because of the beauty of the state. But what happened? California has experienced a flood of people leaving the state. So many people have left California that they have lost representation in Congress. They are literally paying more and getting less. Washington faces this same potential risk. So what do the cases in Connecticut, Massachusetts, and California tell us? There's no greed quite like government greed. Politicians are never satisfied. They will always take more of your money when they get the chance. And people won't stick around when the taxes jump from barely manageable to entirely unrealistic. If we remove our economic advantages, the evidence shows that innovators will stop moving here and job creators will flee to other states. This is the lesson for Washington state and its tax-happy politicians. Residents aren't interested in staying come tax or high water, and wealthy residents are uniquely positioned to move to another state. We've already seen one high-profile example in our state. Jeff Bezos left almost immediately after the capital gains tax was instituted, but there are many more like him who are following suit. What does that mean for the rest of us? Let's get back to that part about Washington state entirely changing the definition of income just to get a little more cash. Washington state didn't have a capital gains income tax until 2023. The implementation was delayed because an appellate court ruled that, in accordance with our own state constitution, the IRS, 100% of states with a capital gains tax, and the dictionary, that a capital gains tax is an income tax. However, that ruling from a lower court stood no chance against Jay Inslee's hand-picked Washington State Supreme Court, who somehow decided that this is an excise tax rather than an income tax. The implications of that ruling are immense because it created an entirely new precedent for an excise tax itself. For example, through this new ruling, Olympia now has the theoretical authority to tax you for buying gas in Florida. But don't worry, they won't expand the capital gains tax to impact you. You can trust the same government who brought you the gas tax, the lottery tax, the sales tax, the property tax, the marijuana tax, the alcohol tax, the hidden gas tax, the long-term care tax, and 37 new taxes and fees implemented in the last 10 years. Our state constitution prevents a progressive income tax, so Olympia shouldn't have been able to implement this tax in the first place. But never underestimate the power of Olympia to find a new way to take your money. All it took was a little hubris and the willingness of the Supreme Court to redefine the word income. This should come as no surprise. Olympia's been working on creative ways to implement an income tax on every citizen for years. But don't take our word for it. Read it for yourself in Senator Jamie Peterson's emails. When the capital gains tax was collected for the first time in April of 2023, politicians and economists were ecstatic to receive $786 million in revenue from the state's top earners. Olympia promptly spent that money on hiring more government workers and starting working groups and planning committees. After the collection in 2024, however, the state only took in $433 million in additional revenue. While that's no chump change, it is a significant decrease from what was projected, and lawmakers immediately expressed concern. Why would the number have dropped so significantly? Because the same thing that's happened in Connecticut, Massachusetts, and California is happening here. People don't want additional taxes on top of every other inflated cost, and they don't want to be penalized for success. Innovators and business owners stop selling shares of their company, stop trading or selling their investments, move out of the state, and then go back to selling their assets. And what does that mean for our state? It means hundreds of millions of dollars, new jobs and opportunities, and the dream to live and work in Washington state will pack up and leave. This kind of a tax also stops people from moving here in the first place and keeps them out of the state indefinitely. We will be experiencing a brain drain as people look to start their next great idea somewhere else. If our government was running state programs efficiently and they were running out of money, then maybe there's a case to be made to take extra taxes. The opposite is true in Washington state. Our government operates with little to no accountability. We even lost over $1 billion of federal money during COVID that Olympia can't account for, and yet they still want to take more of your money. Our state has had a budget surplus of $19 billion over the last 6 years. $19 billion. So remind me again, why are we sending more of our money to politicians who have proven that they can't be trusted with it? The bottom line is this: we have to tax people fairly. Just because someone achieves more financial success than someone else doesn't mean those people should be saddled with paying for a government that mismanages its funds. In fact, we should be incentivizing entrepreneurs, small businesses, and the wealthy to move to our state. Why? Because they bring jobs, economic opportunity, and a boost to our local economies. Our state is among the most beautiful and the most sought after to live in. We've had an economic environment that invited the best and the brightest from around the world to move here, innovate, and grow jobs and opportunities in the state. If lawmakers are left to their own devices, their policies will keep driving people out. Politicians should be getting out of the way of job creation rather than taxing innovation and punishing success. This November, let's make sure politicians know we're tired of government greed. Vote yes, pay less. Stop punishing innovators and job creators, and let's fix what's broken.